On $100 a barrel, lifted in part by those better-than-expected US economic indicators. Late New York trade, the benchmark futures contract reached $99.84, its highest level since the end of July. By the close, light sweet crude for December delivery had slipped back to $99.37 a barrel. Analysts are predicting prices are going to remain volatile and choppy, but stay close to the $100 price threshold. But there are continuing concerns that Europe's debt woes will spread and reduce both economic growth and oil demand. And for a closer look at commodities markets, I'm joined by Jonathan Barratt, Managing Director at Commodity Broking Services. Jonathan Barratt, welcome to the program.
Good morning, Whitney.
So this is a bit of a surprise that oil has been boosted off the back of this positive US data.
It is a little bit, but what we are seeing is a much more positive news coming out of the US, and more people are focusing on the domestic situation in the US rather than what's happening in Europe. It is a shame. Europe accounts for 16% of global demand for oil. So if anything unravels there, then you'll probably see prices start to come off again. So it's a little bit more of a seesaw at the moment, and I think that the price of oil should remain around that US $100 a barrel.
The positive data that's come out of the United States, though, is it really enough to give the market, solid confidence? Because we have seen mildly positive signs out of the US before, only to find it, languish back in the doldrums.
You're right. The data is good. It's good data, and I think that's what the market is happy about. Hedge funds have increased their bets that crude will go up by 7%. So they're basically looking at saying, well, okay, we've still got developments in Iran sort of smouldering away. We've got the US economy starting to look good, and the chances of it falling into a recession are less and less as more economic data comes. The only concern we've got is Europe. So I think there's more confidence gaining. I think that's why you're seeing the price start to move higher.
I'll get to the Europe picture in a moment, but how much does the seasonal issue also play in the oil price?
A lot, absolutely a lot. Because what we do, particularly as we go into the winter months, we start to predict what the weather's going to be, if it's going to be cold demand for heating oil. We are seeing a continual drop in inventories, and that's been a trend, and that'll be confirmed on Thursday night's data. But if that trend in inventories continues to fall and the expectations for a cold winter increase, then that demand should see prices remain at these levels, if not higher.
And that brings me to my next point. My understanding is that American stockpiles have slightly decreased, so that is also playing a role in pushing the price higher.
Absolutely, there's no doubt about it. Normally, they're very volatile numbers, and we saw a draw of about 1.4 million barrels just the other night. So if that continues, then it does become a slight concern because people don't know what the weather will be like. They can only work on forecasts. So there is that increased demand that all of a sudden comes. You don't know it, not like the economic numbers where you can gauge them. But the weather is one of those spikes which also causes the concern for the demand for crude.
Now, let's move to the Europe picture. The story has a way to play out, and obviously there are hopes that, it'll settle down now that we've got new leadership in both Greece and Italy. But if it does flare up again, what sort of impact will that have?
I think people are getting a little bit sidetracked a little bit because it's just there. It's just a problem that's always remained. And it's going to be a problem that's going to stay there for a very long time. I think
is that slightly defeatist, Jonathan Barratt?
To a certain extent. We know it's there, and the market actually trends towards the news. We've certainly seen that in the way the US dollar actually behaves. And that's creating that volatility across all the commodity spectrum. Look, I think that each step is the right step that they're making. But I think it's still going to take a long time. The interest bill, that has to be paid as a result is going to hang around for years and years and years. So they've got to put something in place that will help to reduce that. Austerity measures aren't going to be positive. So I think you're going to see this volatile situation remain for some time.
Okay, given that you're saying we're in for a protracted period of volatility, what will this mean for the oil price? Will it go above $100 a barrel?
I think that it might spend some time up there, but I think it will come back as a result of it.
Spend some time. I like how you say that. Where will it spend some time? And what level?
When you look at a new range of 95 to 105, you really need to see another fundamental push, whether it be Iran or something else that'll see it into a new and higher range. We've still got significant demand from Asia. That's continuing to be okay at the moment. So you've got to see that the demand side of the equation is still quite positive.
So 105, if it hits 105, what sort of action, or if any, would that prompt from OPEC?
I don't think it'll prompt anything from OPEC, but what I think it will do is will promote conversation again for the SPR, the Strategic Petroleum Reserves. Remember that the committee decided that they would release reserves when they thought there was an issue with Libya. If it starts to get up there and they can see the economy starting to slow again, then you'll find that they'll use their power to release more oil onto the market, which should then depress the price. Remember, the price of oil is going to go up. It's going to hurt the economies just as much, if it stays at high levels.
And another issue is in the raw materials sector, we've seen speculators increase their positions off the back of this positive data out of the United States. Do you think that's a little bit presumptuous?
I don't think so. I mean, when you look at it, when you look at the numbers, they are showing good signs. And when you think of where the US dollar is as well, people are taking an investment decision based on the global picture and say, look, the US looks better than anything else out there. Plus,
which is really saying something, isn't it?
Absolutely, absolutely.
Given the current circumstances.
Yeah, and given the currency is so low, that you've got a bit of a hedge there, or you've got that potential to make good gains. And I think that's why we see the US dollar currency actually starting the commencement of a major bull market, because it's probably the best of a bad bunch.
Now, the corollary to this is that gold has actually declined when it's often viewed as a safe haven. And are you of the view that it is actually because investors are putting their money into US dollars? Partly,
yeah, absolutely. I think that you are seeing that, particularly for gold, it's hit $1,800, it's come back again. I think if you start to see people moving towards that US dollar, then that will take the shine off gold. Really, we have to see how inflation and all that pans out. But at the moment, the gold is trading particularly in line with the US dollar and the sentiment of the US dollar.
Let's move on to copper. Now, the American Copper Conference is starting soon. Sounds very exciting. What does that actually mean for copper?
It gives the market a good gauge, because all the purchasers, managers all get together and they have an idea of where they think prices will go. And when you've got the bulk of the purchasers, managers there, then that's a pretty strong force when they basically say we're expecting a shortage or we're expecting an increased supply of inventory. And that then gives us an idea of where we think copper prices can go in the future. At the moment...
Have they forecasted at all what they're expecting?
Not at the moment, no. So we're going to get a bit of a gauge as to how these orders will flow. It normally accounts for about 60% of the demand for copper for the next 12 months in the US. So it's important that we get a gauge as to how they feel. Last year we had concerns on shortages, and the copper price started to trade higher. This year we've got concerns on supply increase. So I guess when you look at that, you can probably see that their demand won't be as strong as before. So prices for copper might remain relatively stable, if not go lower.
Jonathan Barratt, thanks for joining us.
Thanks, Whitney.